Hi, hello, friends. Let us review 29th April, Monday, Nifty chart. What happened? As we discussed in our earlier video, we just have to mark this high of previous day, low of previous day, which becomes PDH and PDL. And this plotting of CPR is already there. CPR resistance R1, R2, and then S1, S2, like that. um, Today's this 29 April CPR is kind of average to wide CPR. So usually when it is average CPR, it's the more likely pattern to be followed is initial range breakout, like whatever is the initial range. Once that is broken out or taken out, the market will move in that direction. This is usually happens on average CPR day, which can happen today. Um, this is just a probability. And then when we see, like, suppose the market opens here, uh, this is kind of a doji candle, like it has a small body and wicks on both sides, top and bottom. So this is inside the CPR. Inside CPR, when there is a first candle and it opens inside the CPR, there is no trade. If it breaks the CPR, the first candle breaks the CPR, that time we can take a trade. That is called a pure pressure trade or CPR breakout trade, which means the first candle is breaking some important level, then we can go long or short. If this is green candle, this breaks this CPR on top side, this will be CPR breakout for a long entry. If there is a red candle breaks it down, then it will be a short entry. After seeing the risk reward ratio only, we should enter. Now here there is no entry, and the third candle breaks the CPR. But if you see, the previous candle wicks is not broken, so this is not a CPR breakout trade. So no entry on the third candle as well. When and this, then there is the reversal. The reversal happens and the first candle low is broken here. Now, when this kind of setup happens within CPR, we should not enter. Now people will say, why can we not go short here on this candle? The reason is this candle is still inside the CPR, and CPR is such a strong support that it can bounce from the bottom CPR and go up, and that is what exactly happened. So it could not break this CPR. This green candle is formed, and then it is reversed full day. Now there is a pattern called CPR reversal pattern. In this pattern, what happens is whenever the market is above the CPR or within the CPR, and it goes and closes, like it is, it is between the center pivot and the bottom pivot, and it gives us a bullish signal, the green signal, where there should be a proper green candle. So this is a proper green candle which says that the the candle pattern is unable to break the CPR. So we can go long here, taking stop loss below this uh, bottom day's low. Then from there we can have twice the target. So in this trade, the target can be achieved. Now you will say here also this candle has broken the CPR, but the the breakout should be clear. The breakout should be clear, meaning on the left hand side there should not be wicks or any candles. So if this candle would have closed above this point, then it would have been a CPR breakout. We could have taken the trade. There is no CPR breakout here also. Although this trade works, I have repeatedly telling you that we should stick to the rules. And whenever this 20 EMI is there or CPR is there or the pivot is there, this acts as a very strong support or resistance. Now you can see the whole day market stays above this 20 EMA, and whenever it touches and it bounces back. So the reason being, this lines, these instruments, they act as a strong resistance or support whenever the candle goes near to it. It acts as a rubber band, in fact. So here also there is a trade, long consolidation, and then there is a bullish sign, and this is called 20 EMA retracement trade. But in this case, if you see, the risk reward is not good. Like suppose if you take a trade here, stop loss here, and then your target should be this previous day high. uh, Although the trade works and it has given 1 to 2 reward, but we should also respect the resistance. This is the resistance wherein long time the consolidation happened and lastly it broke here. So if you would have followed proper risk reward and the patterns and the understanding, like whenever there is a strong support and you get bullish sign, you should trade long. If there is a strong resistance and you get a bearish sign, you should go short. So in this case, you can actually, there is a trade here also. If you say this is a strong supply zone, this is a strong resistance PDH, because from this point till this point the market has fallen. So this becomes your strong supply zone. Now if you see this candle, when it touches here, it reverses, this candle reverses, and people may say that this is a supply zone reversal trade, or we can go short in this trade. But if you see, there is a wicks, um, exactly or similar to the size of the body, so this is not a purely bearish sign. Now you can go short on this candle, keeping a stop loss on top. In this case, you can see the stop loss is hit, but usually the the trade should be taken on the first candle. Like if this candle is not properly bearish and then the next candle becomes bearish, you should avoid those trades. So that's it, guys, for 29th April. um, you can come up with your questions if any. Thank you.